Rania, thank you for talking to us today. How do you think investors in general are changing their asset allocation?
Well, I think investors in general are moving from traditional asset allocations to towards more innovative one. And it's not very innovative; it's just more focused to alternative investment. But it would be helpful just to distinguish between two main groups of investors: family offices and institutional investors. And I had the exposure for both of them. I think family offices or private investors are more risk takers by nature compared to institutional investors. And having said that, they are more focused on alternative investment, and they have a great quality compared to institutional investor that they can act really quickly. And for emerging managers, which is something that major investors would usually shy away from doing. So how they change their asset allocations, aside from moving from the traditional towards more traditional, and I mean by that equities, bond, the cash traditional story, to the one with more allocation to alternative investment with all types, especially after the financial crisis. I would say most importantly what they did in changing their asset allocations are the things that they did is more focus in the type of risk that they should be compensated for or rewarded for. And as such, I think that changes how all investors in the market as we speak now in 2015 and beyond would allocate their portfolios based on the risk as opposed to just merely asset class. So if the asset class doesn't deliver the risk and volatility or whatever the measure of risk for it, the return risk criteria, it would be no longer qualified for the allocation. It has to be based on risk, and I have seen that in the last few years.
What do you think is the best investment opportunity for the next 12 months?
Well, that would be a big question, the million-dollar question, I guess. And that would depend on many factors by definition. So I would classify them in three layers. First is the macro or global circumstances for the world as we see it, how it would develop or deteriorate in the next 12 months. I hope it would develop as opposed to the other option. In terms of macroeconomics in the regions that investors are interested to enter, Middle East, Asia, Europe, or North America, what are the economic situations there? What are the geopolitical issues also? What the technological, the innovation, life science, because that would create opportunities and challenges. So these are from macro perspective. Something very specific to the investment itself would be something related to the specific investment opportunity. As I said earlier, if the investor is looking for alternative investment, would be hedge fund, real estate, or private equity, or equities. What type of equities are they hedged against certain risk? So it's very important to be focused on what you're looking for. It's not an easy recipe that I will tell you put from this and that, and you will have a perfect opportunity for the next 12 months. And lastly, you have to be mindful of what everyone in the market saying, the unknown unknowns. Who would have imagined that we will have failing states, for example? How that would impact your investment opportunity in the next 12 months? Do we know that there will be a major risk in one of the hot spots in the world? Even if you have a perfect investment in one of these hot spots, would you go for it in the next 12 months knowing that there's something can jeopardize your investment? So it looks like something very distant from your day-to-day transactions or investment radar, but you have to keep a look on these things.
What challenges do you think need to be on an investor's radar?
Great, that's a great question. I would also say that it's the challenges related first of all to geopolitical risk. Risk and uncertainty related to things that outside of our control and unexpected. It just proved that geopolitical issues have been very unexpected and accelerate very quickly. You have seen what's happening in Yemen, Iraq, Syria, Libya as failing states, some incidents happening there and there, how they impact the economic stability and sustainability. So this is something to keep your eye on as an investor. And don't think that you are immune because you are in a different country or a different continent. The world is becoming increasingly very interconnected. So you are not away from this. Just keep an eye on and make sure you are safe as far as your investments are concerned. Your personal safety will be responsible for that yourself. And next would be the other big challenge would be the social issues, and this is mostly overlooked in most of the countries around the world. To my surprise, we as a human being, I think, and this is something maybe could sound away from investment, but markets are driven by greed and fear. So it's something very pertaining to human mindset. So we are human, just tend to comprehend and process what is physical, what we can see. What we cannot see, what we cannot feel, is just outside of any process or any comprehension. So the social issue here has been this very important factor that mostly overlooked because we cannot see, we cannot comprehend, we cannot process, or worse yet, we just tend to ignore it. I'll give you one example by the issue of what's happening now in Greece. It has been in all sort of media coverage. Will Greece be out or stay in the European Union and the Eurozone? This is the question, and it's a question of financial markets. Like, it's just calculation how they would be successful in cutting budget or not. Let's check some facts, and maybe this is something I would challenge the viewers if they knew about it before, or even just stopped a little bit to comprehend it or process it. When the European Commission or European Union asked the Greek government to cut budget, they were quite responsive, and they went through their items, and guess what? They chose 2 items to cut among the other things. Well, that's as far as social issues are concerned. The healthcare and educational spending, and within healthcare spending, they cut cancer patients' treatment that used to be available for public because it happened to be the most expensive treatment. Is cancer with chemotherapy and radiotherapy is the most expensive one, and there are many public sources mentioning stories of Greek citizens just being ignored by their government and led to die from cancer. This is ridiculous in 2015. I am not in a position to criticize any government or to tell them what to cut in their budget, but I am sure there are other items like spending on public TV or other more less important items that can be really squeezed a little bit or shrinked as opposed to healthcare. I think everyone is entitled for decent healthcare. So this is something of this to do with social issues. Something in China and Dubai, and I might have mentioned that I have been in Dubai a couple of months ago speaking about the 2020 expo that the Emirates government is intending to host, and it's a major thing for them. They are building and making the infrastructure friendly for this occasion because it's a major event for the Arab world. And I was speaking specifically that if there is no similar development happening for education and healthcare of people, taking care of the physical infrastructure, there is no way that you will run a developed and decent event, not to mention a country. So these things, it would seem distant from investors, but if you are looking for the traditional developed and developing country, if you don't observe the social dynamics in connection with geopolitics, you might put your money in somewhere where it is if I use the analogy, like a boiling pot. It just waits to get explode and you will lose. So these the main 2 challenges aside from risk measurement.
Rania, thank you very much for talking to us.
You're most welcome, and thanks for having me.